Welcome to today's Market Explainer. We're delivering your daily institutional-grade data download directly from the terminal for July 29th, 2026. I'm thrilled you're tuning in. We are going to cut right through the noise today and give you exactly what you need to know about where capital is flowing and, more importantly, where it's getting tomorrow. Okay, so let's dive right into it. Today's session, an absolutely fantastic, broad risk-on rally. I mean, we saw green all across the screens. But, and this is a massive but, we have to remember the tape actually closed right before the highly anticipated Federal Reserve FOMC decision. The market was basically dancing right on the edge of the cliff, fully aware the music could stop or completely change tempo by midnight. The India VIX remained oddly subdued, though, which tells us we're looking at either a supreme confidence or a market that's just holding its collective breath.
Here is our roadmap for today. Number 1, the broad market close. 2, the earnings scorecard. 3, top movers in F&O. 4, market whispers. And 5, tomorrow's setup.
Section 1. The broad market close. Risk on ahead of the Fed.
The numbers are strict, and man, they tell a story of really broad participation. The Nifty closed at exactly 24,250.20, up 1.1%, and the Sensex powered up to 77,654.60, climbing 1.16%. But what's really great to see here is the breadth. Midcaps tacked on 0.82%, and smallcaps surged a solid 1.48%. The charge was fiercely led by IT, metals, and FMCG names. Think Jio Financial, HUL, and Infosys topping the Nifty. On the flip side, though, if you were heavily allocated to lagging sectors like realty or autos today, you were definitely feeling that drag as they trailed the broader market.
Moving to Section 2. Earnings scorecard. The heavyweights deliver.
Look, the sheer velocity of the corporate earnings growth we just witnessed is staggering. Our long theses are working beautifully right now. Just look at Asian Paints. They delivered a massive 40% year-over-year jump in consolidated profit after tax to 1,539 crores, backed by a 9% rise in decorative volumes. That is just a brilliantly clean beat. Then you've got Dauber hitting 591 crores for a third straight double-digit profit quarter on 5% underlying volume growth. Over on the auto side, Eicher Motors printed incredibly strong numbers with PAT up 21.4% to 1,463 crores, driven by record Royal Enfield sales. And ADANIPORTS, they posted a highly solid 10% profit jump to 3,650 crores, and that was driven by an 80% surge in international ports revenue.
But the crucial point here, and honestly, this is exactly why you literally always have to read the footnotes, is Adani Enterprises. They actually reported a record quarterly operational EBITDA of 5,642 crores. I mean, operationally, they are firing on absolutely all cylinders. But they took a massive bottom-line hit, resulting in a net loss of 1,160 crores. Why? Because of a 2,644 crore exceptional charge tied to a U.S. OFAC settlement. It's basically a textbook example of how a pristine operational quarter can get completely derailed at the net income line by legacy regulatory cleanup.
Section 3. Top movers and F&O action. Sector rotation.
The divergence today was striking. KAYNES skyrocketed 12.7% as the top F&O gainer. We saw a sharp 21.7% open interest build up there, which confirms serious fresh longs coming in on their strong electronics manufacturing print. SWIGGY also caught a 7% bid on heavy volume ahead of its impending earnings. But on the downside, you know the market can be incredibly unforgiving. Phoenix Mills inexplicably dropped 5.6% as the top F&O loser. The crazy part? Their Q1 profit actually rose 23%, but the street read a slight office leasing softness as a massive execution miss. And ADANIPORTS, despite that perfectly in line 10% profit bump we literally just talked about, slipped 3.1%. Sometimes the good news is already perfectly priced in.
So, we've seen the hard data, right? We know what's in the regulatory filings. But what unverified chatter is actually moving the tape off screen? Like, what are the dealers whispering about right now?
Section 4. Market whispers and block deals. Unverified market buzz.
Okay, you need to keep a really sharp eye on these near-term supply overhangs. First up, there's high probability chatter that a prominent domestic mutual fund is dumping 5 crore shares of Kalyan Jewelers via a block deal at an 8 to 10% discount. Honestly, given the stock's massive 50% run over the last month, this profit-taking makes total sense. Then we have Vedanta, where rumors suggest promoter Twin Star might add some supply to deleverage around their upcoming post-demerger Q1 results. And finally, in the consumer internet space, Elevation Capital is reportedly lining up a 1,200 crore block sale in Misho. Listen, if any of these hit the tape tomorrow, expect an immediate 3 to 10% downward pressure on supply shock alone, even if the underlying fundamentals haven't changed one bit.
Section 5. What to watch tomorrow. The forward setup.
As we officially roll into the fresh August options series, the positioning is setting the tone. Keep your eye on the nifty max pain strike at 24,200. That's the specific price level where option buyers stand to lose the most money. We've got heavy call resistance sitting at 25,000 and solid put support at 24,000, which really frames our near-term range. Over on the bank nifty, the max pain magnet sits right at 57,600. When you fire up your screens tomorrow, these are the gravitational centers pulling at institutional positioning. If we gap up or down, watch exactly how price action reacts as it gets stretched away from these max pain levels.
Aside from the technicals, the fundamental event path is heavily stacked. The next 48 hours are just packed with earnings event risks. Tomorrow we get TATASTEEL, Vedanta, and M&M, and that's followed by Maruti and Sun Pharma on Wednesday. But look a little further out to August 1st. The U.S. reciprocal tariff deadline is looming. This is the real geopolitical swing factor that could heavily impact our IT, pharma, and import-heavy names. Keep this date circled in red on your calendar.
Synthesizing all of this, our top idea and focus for tomorrow is going long on L&T. Why? Because the fundamentals here are simply undeniable. They are backed by a staggering, record-breaking 5.12 lakh crore order book. That is an absolute mountain of visibility. Combine that with a recent Q1 PAT jump of 14% and serious, undeniable domestic infrastructure and defense capex tailwinds, and you have a very, very strong setup. The only real risk to monitor here is a potential execution drag in West Asia and maintaining that 9% EBITDA margin. But for sure, the momentum is squarely in their favor.
As we wrap up this explainer, just a quick reminder, this is personal research for educational purposes, not investment advice. Always verify X dates and definitely do your own homework before trading. But I want to leave you with this final thought. When you log into your terminal tomorrow morning, ask yourself, will the overnight FOMC decision validate today's incredible risk-on rally, or is the Fed going to completely flip the script? Sleep well and trade smart tomorrow.